All right, so hello everyone, and thanks for coming out to our webinar tonight. I'd like to introduce you to our speakers for the night. First up, we have Mr. Akalantova, the founder and CEO of BizRing. He is an engineer and has over 10 plus years in real estate investing across Ontario. He's also the author of the book called Fire Your Job. Our panel tonight of speakers for tonight's webinar consists of François and Jennifer Lanthier. So passionate interior designers turned successful real estate investors are here to share with you their experience of investing in real estate. At the end of the webinar, we will be picking a winner for a book giveaway. So the way to win this is by following us on our social media and engaging on our posts. Now I'll be letting Mr. Ackland take it from here and start the presentation.
Thanks, Jeff. Welcome to our webinar, François and Jennifer. So this time we are not going to do any presentation. We are going to dive into some questions so that François and Jennifer, you guys can share your real life experience with our current and future audience.
Excellent.
So, would you be able to share what made you to get into real estate investment and the journey so far?
Yes. So one big thing for us was the freedom. I mean, as when you're employed, as you know, you have been employed in the past, you are relying on your employer. So for your income, and any wealthy people has more than one stream of income. So real estate was one great way to add a stream of income, and actually in the end for me replaced my job. So it's been really good. And Jennifer, why did you join real estate?
Well, I think that we just kind of we've always been passionate about, like you said, interior design. We've always been passionate about buildings, properties. We've always been people who are always looking at properties, and we started off with our own house, buying them, fixing them up slowly, and then selling them out. So I think it just was an obvious switch for us.
Yeah, the first house had hot pink everything, so it was really bad. Blue tubs, so it was a slow flip, and then we were hooked. So now we've had many houses, and as you can hear, here it's quite echoey because that's another acquisition, but we decided to rent it out and turn it into a cash flowing property. So
good. So both of you have interior design experience, right?
Yes.
Okay, so that's so interior design, and then you pivoted. Okay, now we are designing it for others. Why don't we do on our own projects and utilize our own expertise, right?
Yes, exactly.
Looking at material and optimizing. How do you get the most value when renovating? It's always fun when I'm shopping with Jennifer for fixtures and things, and we know how to get the best materials for the lowest price, because we used to shop for clients, so now we shop for ourselves. And
that's great. So who got into real estate investment? Probably you guys were studying interior design and then doing interior design for others. So who thought, okay, let's get into our own investment, like you, François or Jennifer?
The bank.
The bank.
It's really the bank. So what happened is we were buying houses, selling them, making, well, not really a profit, because every time we ended up selling, it was like the economy crashed in 2008. That's when we sold our first house. So very bad year to sell a house. And then 2011, we sold our second house, and we were in Ottawa back then, and it was the Conservative government. So not a great year. I think 27,000 people were laid off in Ottawa that year. So very bad again. And then we moved to another house. And anyway, we didn't know when we sold that third house that we'd get a big mortgage penalty. And we only found out at the day of closing. And then the bank told us, well, you could recuperate that penalty by buying another property. And then we're like, oh, we never thought we could do that. And so we did. So we bought a small condo, and then we're like, wow, we're onto something. You can buy more than one property. I thought you had to be super rich and buy cash, and you couldn't get financing. So then we were really excited, and we grew from there.
That's great. Yeah, like there is some kind of tipping point for everybody, right? Then that the light bulbs comes in and it clicks. Okay, let's get into it. Yeah, for me, the 2000 stock market crash. I lost like $80,000 to $100,000. So that
Wow.
enabled me to get into real estate. Otherwise, I have no clue about real estate investment or even nothing to do with it because I was in the engineering side of it, right? So out of both of you, because I know like I do attend networking events and places, I do few couple investors, not many, right? Well, most of the time, either husband or wife. It's very rare. Both of them passionate about real estate investment, right? So who is the motivator out of both of you? Like, let's do it. Like, let's get into the other one, right?
It's the two of us, so it's
Yeah, it
really
depends
bad.
on the day.
So usually when I say I'm out, I'm done. Like the other day I said, I regret the past 14 years. I never want to do this ever again. Then a few minutes later, Jennifer's like, really? And then she kind of encouraged me because we were going through some rough things. And then the opposite, sometimes I'm super motivated and she's like, oh, let's get out of this. So that's kind of why it's a good tag team. So
Yeah.
Mhm.
yeah, we're both as motivated. I'd say networking though, I do more than you do just because,
He talks more.
yeah, I never shut up.
So who is the strategist and go and getter? Okay, let's find other property and do strategy behind a property, right? Of course, there are multiple ways you could make money from a property, right? So who does the strategies and planning behind it?
I think that our strategies are always kind of evolving, but I would say I'm more of the analyzing person, and François is more of the I just found a deal.
Or I find a partner or a money partner, and then here it is, and you fix it because I have no idea how it's all going to come together. So yeah, Jennifer's the money and the logistics, and I'm more the let's try new things and let's move across the country for fun.
Yeah, that's good to have somebody within the household, right? So that whenever you are down or whenever you run into problem, there you could rely on somebody, right? Rather than going out and trying to explore outside. It's good.
Yeah.
So before you guys got into real estate investment, have you tried other a form of investments like mutual funds, stocks, or anything these days, cryptocurrency?
Yeah, well, we did have a little bit of stocks. We had RRSPs and RESPs for our kids, but they were all losing money.
Exactly.
Yeah, we were seeing like we're contributing this amount each month, and then looking at the account and it's less and less. I'm like, I could just put it in a savings account and do better. That's in 2008, 2009. We're like, well, this is crazy. We need to pull out our money out.
Mhm.
And then 2011, that kind of moment happened and we're like, okay, this is it. We're no longer doing RRSPs or RESPs. Forget it. It's pointless. But there is something to be said about registered funds that's positive. I mean, if you're an investor, you can lend out or borrow registered funds from other people. So that part is interesting. We didn't know about it till it was kind of too late and we'd lost all kinds of money and all that. So yeah, we've tried that. We've tried starting little small businesses, interior design, different things. Nothing really garnered any real income. So yeah.
I remember like I have invested in late 90s in RRSP, and then with I think 2000 .com crash, it went like 60% down, and then it took a while to come back, and then 2008 crash happened.
Yeah.
So it's kind of, it came back and then went down and came back. I said, that's it. It's not worth of putting the money in RRSP, and it's kind of it falls and come back, and at the end of the day you may end up having your own capital, whatever you have invested, right? It's not even catching up with the inflation, right?
No. That's it. You could put it under your mattress. It'd probably just as safe. So, or burn it or whatever.
Yeah, that's where I started the thing and started to get into real estate investment while everybody was going out in 2009, 2008 and 9. Yeah.
That was the same for us. We're like, no, this is not working.
Yeah, that's great. So do you guys focus on residential investment or commercial investment?
We do a mix. So we do some smaller, like where we are right now, it's a duplex. It's a really large house. It's crazy how big it is. But it's 2 units and it does well. I mean, the plan was never really to rent it out, but it turns out it actually does well. We do smaller multifamily, like up to 6 doors. We would like to get into larger. We are looking at syndication and other methods of financing larger deals, but we do love Airbnb as well. We were talking before we came on air about our cottage in Prince Edward County, and I understand you have a place as well there. So that's a great spot, and Airbnb is really good. So we're looking at Airbnb options in other countries as well, not just Canada.
Okay, that's great. Yeah, so now you're thinking about going beyond Canada and investing in other countries too. That's great.
Yeah, so we already have investments in the US, and now we're thinking about other countries as well. So the Caribbean, Southern America, and other places. Not across the ocean though. So we did draw the line. I was looking at Japan, and Jennifer's like, this is insane, stop it.
Still connected via land, huh? If you
we could drive
Latin
there
America.
somehow.
Yeah. So, okay, now, so you have already explained to the other question I was thinking about. So you don't focus on single city or even province. You go even across Canada, even out of Canada as well. That's good because, in Ontario, especially the major cities like Ottawa, Toronto, the properties are more expensive and the cash flow is pretty low, right?
Yeah,
absolutely.
And that's why we've expanded. Like Jennifer's like, well, cash flow is bad, tenant laws are bad, and
yeah, tenant law in Ontario, it's pretty bad. I hear in Quebec even much worse.
Yeah, next level. But then there's good provinces like New Brunswick, Alberta, and Saskatchewan. Nova Scotia, unfortunately, they're getting a lot of more tenant protection and PEI. Newfoundland, I'm not too sure. So yeah, I'd say there's 3 good provinces for now, but it is a bit of a double-edged sword. So yes, the tenant laws are better, so it's more landlord friendly, but tenants are less loyal too, which sometimes is good. You want them out, but there's more turnover, I find, in those provinces because people they don't stay as long, which can be a good thing. You can increase rent, but if there's a downturn, then rent can go down, which is not something we're not really familiar with that in Ontario, but other provinces do see up and down, like the stock market for real estate.
In Ontario, it's always going up, right? The rent.
Never down.
Yeah. So what is your strategy with properties? The buy and hold, or just buy it, renovate, and then sell it in 1 or 2 years? Or what is your strategy?
We do use a few strategies. So we do like the buy and hold, but we also do have a few JVs. So those are always going to be with a term of about 5 years. So we usually like to do a little bit of a lift, so renovate them a little bit, rent them out obviously, and then after the 5-year term with the JV partner, sell them.
Yeah, and if we can in between, get some sort of refinancing, do the BRRRR strategy. It's hard to do a perfect BRRRR now, but it's usually you're able to pull out most of your equity, if not all of it, it depends.
Yeah.
So that's fun. Or we have a JV where it's an Airbnb cottage as well. So that's really fun. What else have we done? Well, syndication, we're kind of looking into that because we have lots of lenders with smaller amounts. So syndication would be the next thing.
Yeah, that's good. Yeah, I have done syndication as well because syndication is the way to grow because now you are going beyond your financial capability, right?
Yeah.
Because for sure, after a certain number of properties, all your savings and capability is going to get saturated, right?
That's it.
Yeah.
And you're not giving up. It's not like a JV where you're a JV is great, but you're also giving up 50% or a large percentage. While syndication, depending on how it's structured, they're private lenders, so you don't give up equity. You're paying interest.
Yeah. So for someone who is just starting to get into real estate investment, what would be your advice? Probably I'll ask Jennifer and then François.
Well, I would say just to learn, network, talk to a lot of people who are already doing what you'd like to do, and then start. But start off small, so you can do like a little duplex or do a little duplex conversion or something. But at least start and then kind of get your feet wet and get a good idea for what you want to really do.
Yeah. Exactly. So you learn quite well from me.
Oh, yeah.
Just kidding. No, but I would say the same. So start small. Like we got a condo. We don't have that condo anymore. I don't say condos are great, but it was a nice learning experience. So with the condo, there was no lawn care, things like that. So it was easy to look after with a full-time job, and we had really young kids back then. So
yeah, it was a good start.
Yeah, it's like low maintenance. You just look after the interior, get a tenant, and that's it. Pay your condo fees. I got involved with the condo board as well to make sure condo fees stay reasonable and it's well maintained. So it was quite a learning experience. Yeah. And then I met lots of investors at the condo board that own several condos on the property. So that was interesting as well and eye-opening. And yeah, so I'd say beginners start, that's it, small, like at least one small. Then you can go much bigger, but at least one smaller project. Or even house hacking. Why don't you put a basement apartment or rent out rooms and build some capital or wholesaling? We were on a podcast last night and the person said if you're very young and you have no money, let's say you're 21 and usually at 21 you don't have too much money yet, then wholesaling is a great way to build some capital, some credit, some credibility, and then you can grow from there. If you're a bit older, you're 40, 50, and you want to get started, then that's different. That's where or 30 or 25, that's where the basement conversions and all those things work.
Yeah. I have seen wholesaling in US. What about in Canada? Have you met wholesale people?
It's everywhere.
It's constant. All our properties, our tenants receive letters targeting, we buy houses for cash or we want to buy your property. It's a little much right now, I'd say, but I mean, wholesalers are there for a reason. The markets are crazy, so people want deals, and usually those are more distressed deals or there's something going on with the property or the owner. And they do cater to a niche clientele. So there's tons of wholesalers, every province. I'd say almost every city. I haven't seen a place where there's no wholesaler.
Yeah. You're right. Like people, if somebody want to invest in real estate, rather than procrastinating, they should get into it and get their feet wet and get some experience. And then they have to decide, is this something, because handling the tenants is not for everybody. And you need to have thick skin and you don't want to cross the barrier. You have to be in the middle, right? You don't want to get too close to them. And at the same time, you don't want to be too far from them either. So you got to balance things properly, right? And then they can decide if I want to do it myself or I want to partner with somebody who can handle all these headaches and do it. I remember when I was working in Ottawa, one of my colleagues, his tenant was giving him a lot of trouble. Finally, he sold that property with a loss, and then he said, I'm never going to invest in real estate.
No.
Exactly. So many people have those kind of bad experience and then they run away from it, right?
Yeah.
And for me, like I did run into a bad tenant, but the thing is, I took that as a lesson. And all the money I was spending for the lawyer, even one time I had to shut down the 4-bedroom whole 2-story house in Ottawa. I didn't want to rent it. I just want to sell it because of the unnecessary headaches and everything associated with that. But the thing is, I said, okay, it is a lesson. I have learned, and that is the money I spent and lost. That is a tuition fee, right?
Yeah.
So if you take it that way, because otherwise, where else you are going to learn? There's no college or university to teach all these kind of experience, right?
Exactly.
Yeah.
Not everybody's gonna get a bad tenant for sure, one or many.
Yeah.
So-
That is part of the game, right? Otherwise, if it is going to be walking in a red carpet, then everybody can do it, right?
Exactly.
So if you look at recently, right? I know like Ottawa, like I lived in Ottawa for over 20 years, and I owned property from close to 20 years. I had owned property, but the thing is, it has not appreciated that much till past 3 years.
Yeah.
Like only like it was just limping, like compared to Toronto, it was nowhere near, right?
No.
And past 3 years, it has started to pick up rapidly. But Toronto is historically always been going up, and even recently also it is going up. So what is your take on like, and also during the COVID, people were thinking, okay, there was a time stock market was going down. Now stock is also all-time high compared to the economic condition and the employment, right? And what do you think going to happen to real estate? Any thought?
Well, I think that there was definitely like Ottawa is a good example. Like for the last 3 years, it did kind of like have this big boom, but that was kind of what we call a market correction, because in Ottawa, the housing prices weren't as high like as in Toronto, if you think about that, but salaries are high compared to Toronto salaries. So I think that some of it was a market correction, and then part of it was just this crazy COVID business that nobody understands. It's like everybody needed to buy a house all of a sudden. I don't know where they were living, under a box, and then they needed a house. But I think that the things are going to kind of stabilize.
Yeah. And Ottawa too, major infrastructure projects. So Ottawa did not have a train. So now there's like a subway, like a light rail, and that's totally changing the city. There's cranes everywhere and large skyscrapers, like 60-story condo towers. For Toronto, that's small, but for Ottawa, that is big, instead of 20 stories. So that is totally changing the landscape. And that's something that was planned since the early 80s. And Ottawa was always, oh, let's do it later. And now we finally have that train, and we're finally growing. And like Jennifer said, salaries in Ottawa are very high compared to the GTA or Southwestern Ontario. We lived in London for a while, and I don't know how people afford housing there. It's more expensive than Ottawa, and salaries are like half. So it's just normal. It's bound to go up. There's no way but up. Southwestern Ontario, those people I think need to be a bit careful. They're seeing a lot of people from Toronto moving out, but at some point that could turn. And small markets, like we used to invest in Cornwall, Ontario, a small city. You have to be careful there. Prices have gone up a lot, but employment is much weaker. Salaries are a quarter of what you get in Ottawa, and prices are climbing up. So that's where I think the bubble could burst for sure. New Brunswick, Alberta, other places where the economy is not as strong and as diversified. In Ottawa, it's not diversified, but it's government. So I'm sorry, but it's there to stay.
Ottawa employment is pretty strong. Even like if you look at the high-tech side, I'm hearing a lot of high-tech companies are still actively hiring, and the salary is pretty high. And the government, their salary also, it used to be like 20 years back, when I have graduated from university, I never applied for government, because that time there was a huge gap between government salary and the high-tech salary, at least 30% lower. But now I think either par or even, I think it is par right now. And universities, I mean, we have quite a few large universities. So it's market fundamentals, and that's what Toronto has. Toronto has all the fundamentals, the light rail train, the subway, the GO trains, the airport. It's just crazy. And immigration, we haven't even opened our borders Exactly.
to immigration. So those I think it's 300,000 newcomers every year. They're waiting. Can you imagine when they arrive?
Out of that, 100,000 stays in GTA.
Well, that's it. So imagine when those people show up, it's going to be insane. And now refugees too. It's really sad what's going on, but some of these people, well, all these people will need housing, will create more income, more businesses. So Canada is just, it's prime to boom. And I don't know if you look at other countries, like Australia is similar to Canada, but they have one big problem we don't have, is they lack water. So Canada we have tons of water, so we can keep growing and growing. At some point we may run out, but Australia has major issues with drought and water. So it does, I mean, if you like the cold here, you can really move. There's lots of space. So
I think that is a one and only thing chasing away people from, right? The cold weather.
Yeah.
I ran away from Ottawa. Like, I would say one of the reason could be the winter cold.
Yeah, it's nice. It keeps the germs away.
I was wondering, people, as we are discussing, right? Like major cities like Ottawa, Toronto, the properties are becoming expensive. So people tend to buy outskirts from the cities. I remember, like when I was in Ottawa, like Carleton Place, we felt like it's like far from Ottawa. Right now, Carleton Place is like embedded into Ottawa. Canada, it's like downtown, part of downtown. Like everything is kind of getting condensed and expanded, right? So what do you think the challenges people may face when they go like 100, 200 kilometers away from their place where they are living, right? What are the challenges you see managing distance properties?
I think it's always just making sure that you have good people on your team. We always make sure that we have a good plumber and a good electrician where we invest, because they can do whatever we can't figure out.
Yeah, that's it. You can always drive and paint and do a few things, but you do need some people on your power team and investors, driving further and further. Because like in Ottawa, we only have one rental property now in Ottawa. As prices are so high, we tried for years and we're like, okay, well, let's go elsewhere. And like in New Brunswick, and we're actually in New Brunswick right now. And we've set up this power team. So we spent 6 weeks in New Brunswick, meeting people, interviewing people, setting up systems and processes. And we do the same wherever we have properties. So we haven't gone to Detroit yet, but we do have properties in Michigan. There, it's kind of a turnkey project, so that's easy. But Florida, we're heading down in November, depending on rules, but hopefully we're heading there, and we're going to set up teams, and same idea, people that you can call on and you can invest remotely.
So when you own distance properties, it is crucial to have power teams in each cities, right?
Yes.
I have identified that, and so that's why, like when I founded BizRing, that is one of the key feature we have embedded that within BizRing, because there is no platform have those kind of features, and that's why BizRing is offering absolutely free for real estate investors. Yeah.
No, and that's amazing, because that's what investors need, and we've had other conversations separately, but investors, it is kind of a lonely business.
Exactly.
You show up in a different city, and then they know you're an outsider. You have to be careful what you say, because then you get charged more, and it's different. So you have to be quite astute at what you do.
Yeah, that's true. So for real estate investors, I'm going to give you a few options. You tell me which one is the biggest challenge. So for real estate investors, what are the biggest challenges preventing from growing? Either finding deals, managing them, or raising capital?
Finding deals.
Yeah. Yeah, money
right now.
Money right now, is not a problem. There's actually a overabundance of money. It's properties that's we know and we can tell. I mean, we're in a housing crisis in most cities, provinces, states even. So something's going on, but money, there's lots. So it comes through networking, and we had a great guest on our podcast last night. She does just private mortgages. And I'm like, oh, do you take new clients, like new lenders? She's like, no, I have too much money to lend out. I don't want any more lenders, which was like, whoa, okay.
Yeah, because you can always build systems. You can always talk to more people and find more money, but you can't just like make properties appear.
No. Exactly. Yeah, you're right. Because the government is printing money, right? You cannot print the land.
No. And the permits.
If you find the machine to do so, please let us know.
Yeah, layer it.
So how do you handle the high maintenance and demanding tenants?
Sometimes I tell François not to answer the phone.
Just pretend nothing happened, huh?
Yes. It's kind of like children, I find.
Yeah, I think you have to kind of manage expectations. So sometimes you do have demanding tenants, but a lot of times you have really nice tenants and people that are willing to help you out. So I think that sometimes you just have to make the other tenants realize that some things just aren't realistic, or you have to say, oh yeah, it's going to come eventually, and you have to kind of push things.
Yeah, phase things. And I mean, it depends too on the rental. Like we have some lower end rentals and some higher end rentals. So of course, if it's higher end, yes, we need to keep it mint condition, everything perfect. Lower end, we don't want to be a slumlord, but if it's not essential, like a little scratch on the ceiling, well, I'm sorry, this can wait. Or like mulch in the front, that can wait. But if it's a leaky faucet, absolutely, we fix that right away. Or a faulty appliance, a broken window, like it's got to be clean, functional, and safe. That's a priority. Aesthetics could be secondary if it's a lower end rental. If it's higher end, then that's a different thing. But yeah, you command the rent accordingly, and you can talk to your tenant. Well, depending on the province. Some provinces you can have discussions. Hey, do you want all these things? Sure, that is doable. But this is a business, you realize, so I have to increase rent. And are you willing to pay that? And a lot of tenants will say yes, and then some will say no. But that's something that's the nice part, is you can negotiate that in some places, and others you can't. So you just you defer things unless it's essential or really needed.
I think you have to assess situation by situation and then make the decision. And if you have to explain them, that's not necessary now, and it can wait till next year, or even if it's not necessary to do it, then I think as a matter of communicating with them properly, right? Yeah,
it's huge communication. It's very important to have that open line, and let me know, tell me, and we'll see what I can do. And sometimes it's silly, it doesn't take much. Sometimes you can even there's quick fixes or little things you can do to make things better for your tenants, and then they're happy.
So would you be able to share one of your worst experience you had in this journey, real estate investment journey? One of your, I know you would have gone through many, just one.
Just one, a horror story.
Maybe one of our super good tenants.
Oh yes,
that's an easy one.
There you go.
So you were talking about tenants' expectations. So in Ottawa, one of our rental properties, we found these tenants. They were awesome, great references, but they were extremely demanding. Nothing was ever right. Like the water temperature was being measured, it's off by half a degree. All kinds of things. So that was really hard. Like the hydro is 50 cents more than last month. And I heard the dog bark once a month ago, and it was just constant. So that was a really hard experience. And thankfully the tenants moved out, and we ended up, it was a duplex, and both tenants were quite picky, difficult, demanding, and nothing was ever right. And they paid their rent and everything. It's just every month something constant. The doorknob has a scratch. There's the lighting is not bright enough. The driveway is not level enough. It was hard.
So they left by themselves.
They did, thankfully, for life situations. But one big thing we did learn is, and that's true of all tenants, they're on their best behavior when you meet them at the first time. So they were already picky and demanding. So that should have been an indicator. Run, don't pick them.
Oh, I see. Even during the initial communication, the initial conversation you had, they were a little picky at the time?
Yeah.
Oh, I see. Okay.
Yeah.
Like little things. Oh, the lease. Oh, I want this. I want that. Oh, I don't want to pay on the 1st of the month. I want to pay on the 4th of each month.
Oh, okay.
Oh, this light bulb's flickering, and just really silly stuff. But those are red flags. And anyway, we've never had that. We had the opposites. People that don't pay on time, that keep the place like dirty. So I'm used to flagging those, but the opposite, like super clean and super good, I call them. I've never had that before. So
since I asked you the worst experience, probably I'll share you one of my best experience. I had 2 tenants came from Tanzania, and they came to Montreal, and then from there, because they must have migrated using business visa, I guess. And then through Airbnb, I found them. So the 2 brothers moved in. They asked, because it was a bungalow house, like main and the basement level. They said, we want to live in your house and we have enough money and we are willing to pay even 6 months rent. I said, that's fine. But the thing is, legally, I'm only allowed to get first and last month's rent. So I let them in and they lived there. They were very nice people, and he would even invite me for drink. And I was very hesitant, but I don't want to be rude, rejecting all the time. I was, so we'll go to pub a couple of times. And then the elder brother bought a house. And then when he bought the house and he invited me to go to his house for the housewarming party, I was so happy that people from abroad, they were able to move into my property first. And then comfortably, they were able to buy another property, their own property, and move in there. And then I invited me, so I went there, and I had a good time with them as well. He's still in touch with me. So,
wow.
Yeah.
That's a great story.
Yeah,
exactly. I have quite a few stories like that. At the same time, of course, I have horror story as well. I don't want to share both of us horror stories, right? We have to talk about some positive things as well, right?
Yes.
Yeah. There's lots of great tenants as well.
Exactly,
yeah, we've had some really nice people looking out for us, even working for us. Yeah, there's great people out there for sure.
Yeah.
It's easy to dwell on the negative.
Yeah, actually, one of my property in Ottawa, my tenant is moving out because he also bought his own property. Now he's the one showing my property.
Nice.
Wow, that's
a
nice.
major tenant. Yeah. Yeah, so a lot of good tenants there. It all depends on the individuals, right? If they are genuine, nice people, they'll be nice to you. But if they are bad people, of course, every aspect they are going to behave bad ways, right?
Yes.
Absolutely.
So after you started to invest in real estate, or the time you started to think about getting into real estate investment, have you had any mentors? Or do you have any current mentors?
Yeah, absolutely. So we actually, after our first 2 properties, we started with a mentoring program called Investor Mel and Dave. So they use a certain strategy, like a specific strategy that really interested us, which was using other people's money to invest in real estate. And we did that for, well, we're still in the group. We just have done it all.
Yeah, we're kind of evolving from there. But...
And now actually we're going to be starting to work with another mentor just because we want to up our game to the next level.
Yeah, I find about every 2 years, it's like working out. If you go to the gym, you change your routine, you increase your weight, whatever. So same thing with this. So our next level mentor is doing more land development, bigger deals. So that's where we're heading, and that's why we're investing in a new mentoring program. And it's important to have coaches, mentors guide you along and just challenge you.
Mm-hmm. Yeah, that's true. Yeah, sometimes they will push you beyond your comfortable zone, right?
Yeah.
Mm-hmm.
Yeah, I did have a couple of mentors as well, and I do become part of investment clubs, like especially in Ottawa. I used to be Ottawa Real Estate Investment Club, Oreo.
Oh, great.
Yeah.
Are you guys members there?
No, I was for a little while. I just
Well, with COVID, there weren't as many.
meetings and
Meetings going.
opportunities, so
Virtually.
I kind of went more digital and virtual. But maybe who knows, this fall or next spring or whenever things reopen.
Yeah. So my last question, probably that could be the golden question for our viewers. How many properties should someone own to get financial freedom?
As many as they need to get the financial freedom.
Yeah. As many or as few. So
Yes.
we've had a great guest. So Dalia Barsoom from Streetwise Mortgages. So she's helped us a lot. And she told us, and that was kind of an eye-opener. How many properties do you really need? And she told us, like, a lot of people, like, you'd be shocked, 3, 4, 5, and you're good. You don't need 1 million properties. I mean, unless your goal is to be huge, but her goal was just enough so she can retire and have cash flowing properties that are paid off.
Yeah.
So I like that strategy, and that's kind of what we're focusing on, is fewer but better. And it's just a good model, because the more properties you have, the more potential headaches, more potential problems. So it's better to have fewer, more work. So fewer, but that perform better. So they're optimal, and they're just, yeah, they cash flow nicely, they appreciate well, and that's it.
Yeah. But if you hold it for longer period, then the cash flow will improve year by year, right?
Yeah.
And my thought is, the number I have in my mind is 8 to 10 properties.
Yeah.
They don't have to be $1 million properties, right?
No.
Like you can even buy like $200,000 or even $300,000 properties. If you get 8 to 10 properties, if they are like half mortgage or even some of them are paid off, if you start in your early 30s, by close to 50, you can be like at least 70% mortgage free, right?
Yeah.
And then you have 3 or 4 properties, they can pay all the expenses for all the properties. And then the cash flow you'll be getting from the 5, 6 properties, even if you get $1,000, $1,500 or $1,200 from each properties, you could easily get $60,000 to $80,000 per year, right?
Yeah, that's perfect.
So with that, you can have a like middle class life.
Yeah, and that's it. Like, and we're happy with that. I don't drive a fancy car. I don't want a big house or anything. It's more lawn to care for. I just want simple and easy, but safe, and the freedom to choose what we do. That's the biggest luxury, is the freedom to choose.
Yeah. All right. Yeah, those were the questions I had, and let's see if anyone of our audience have any questions. Probably they could put that in the chat. So do you have any engagement on our social media platforms, or you want to pick anybody? If nobody engaged, then
Yeah, no reason.
okay. I think Hillary and Shirley, if you guys have any question, you can put that in the chat.
Or you just ask out loud.
So what are the landlord-friendly provinces? Hillary is asking.
Yeah, so definitely Alberta is number 1. Saskatchewan, I'd say, is also landlord friendly. New Brunswick is quite good. Manitoba, I'm not sure. I think Manitoba is good as well. Everyone else, be careful. Like, I mean, there's a variety of laws. I'd say the worst ones, want to reverse the order, is Quebec, BC, Ontario are very similar.
Yeah.
And then the other provinces have
something in between.
Yeah. And
I
then,
hear between Quebec, BC, and Ontario. Ontario is better?
yeah, Quebec is the worst for sure, by far, because it's all of Ontario's laws, except the other thing is that if tenants move out, a new tenant can also get the same rent the previous tenant had. So that's really hard to get increases. You have to apply, prove you renovated the place. And
Wow.
all kinds of things. But one big thing that's much better in Quebec than in Ontario is I'm not sure what it's called, Régie du Logement, the delays. So it's like the Ontario Landlord and Tenant Board. The delays are really short in Quebec. They're a few weeks, while Ontario can be 2 years in our experience. So that's a big improvement. So that's one big plus. And then BC is very similar to Ontario for laws. Alberta is the easiest one. It's like the Wild West. It's crazy. And then New Brunswick is quite simple. But yeah, there are some things like damage deposits you have to apply. There's some rules.
I think it'd be definitely a bit more complicated than Alberta, but it's still very landlord friendly.
Yeah, Alberta is like almost nothing. It's crazy. I'm shocked by some of the easy laws they have out there.
Yeah, I knew quite a few Ottawa investors. They were investing in Alberta. Yeah, I always stayed within Ontario because each province landlord and tenant law, you got to learn a lot and all sort of things. I didn't want to go through the cycle all over again and again. So even though I lived in Ottawa, I didn't cross the river and buy it in. I didn't buy anything in Hull. Instead, I bought it in Toronto. Even I purchased a apartment building in Windsor, but I didn't cross the river and buy anything in Hull. It was damn cheap at the time. Like I was able to buy $150,000-$200,000, but because of the landlord and tenant laws and all sort of, and also another thing is the language barrier, right? French. Yeah.
No, that's it. That's a big thing. And then there's all kinds of other things in Quebec, like even loans are different. Insurance is very different. And when you own a property, there's what is it called? Yeah, it's the legal guarantee, which you don't have in any other province because they have the civil code. So if your name is on the deed at some point, you're liable for anything that happens for all times, and your kids and your grandkids forever and ever. So it's something to consider before buying there, because they could sue you 100 years in the future and say you put something incorrectly in the house.
That you don't know about.
Yeah, and it's got to be stuff you don't know about. So if you knew about it, they can't sue you. But if you don't know about it, that's when they can sue you. So it's really crazy. You've only
I assume you guys don't invest in Quebec.
Yeah, and be careful. That's my thing. There are people doing really well, but you have to have a solid lawyer.
And probably much thicker skin.
Yeah, really.
Yeah.
Someone says, Hillary, Alberta's economy is known to be unstable with a volatile oil and gas industry only. No other industry. Is it good to invest in Alberta? Alberta is also known to go through a recession every 10 years. So I kind of beg to differ though. It's very oil and gas, but there's a lot of high tech now, more and more.
It depends on what city in Alberta you're going to be investing in. So there won't be a lot of appreciation. It's not like in Ottawa or in Toronto where you can see those high spikes of appreciation. But I would say you do have to be careful in what city in Alberta that you invest in.
Yeah, and salaries are extremely high. So if we think GTA people are doing well, go to Alberta.
Calgary
made a fortune, way more money than GTA people. I'm sorry to say it. And income tax is way lower. And tax as well. There's no land transfer tax. There's no property taxes are much lower. Utilities are fairly low compared to most provinces. So there are pros and cons, but if you're looking for appreciation, that's not your province for sure. It's a cash flow place. So look for cash flow. And that's how you make your money in Alberta. And it is boom and bust. It's much more American in flavor, I would say. So things go well, things fall apart, things go well. But if you go in for cash flow, this doesn't matter. If you buy the right property, you don't care about a recession.
If the property cash flows, it doesn't matter, goes up so down. Every month you are making money and you should be fine. When that catch up with the wave, right? Next wave, you will catch up on the appreciation side of it.
Exactly.
Thanks a lot, Jennifer and François. I have learned a lot about other provinces and what's happening out there as well. And we will catch up again. And thank you very much.
Thank
Our
you. It was
pleasure.
a pleasure, and have a great evening.
You
Thank
too.
you, everybody.
Thank you, everyone.
Sure.
Bye
Cheers.
now. Bye now.
Bye.